Maruti Suzuki is higher in today's trading session, up almost 2% as November sales led by the SUV segment were better than expectations. Eicher Motors, however, trades lower after CV sales failed to meet estimates.
Adani Group stocks rebound continues after billionaire chairman Gautam Adani breaks his silence on the indictment by the US District Court on misrepresentation related to bribery in India, saying no one from the Adani Group has been charged with any FCPA violation and reaffirms the group's commitment to regulatory compliance.
Dixon Tech is surging in today's trading session, up nearly 6% after it begins production of Google Pixel at its Noida plant. Brokerage house Nomura issues a buy rating, sets a target price of 18,654.
RBL Bank and Bajaj Finance opened with cuts after they mutually terminate a deal to issue co-branded credit cards. Morgan Stanley and Investec issue bearish notes for RBL Bank, while Citi and Jefferies remain bullish on Bajaj Finance. Hello and welcome to Chartbusters. I'm Nigel and with me is Manglam. Well, Manglam, before we get to the market action, wanted to congratulate you on your 10th anniversary, work anniversary. Plenty of buzz yesterday on social media as well. So wish you all the best. 10 years have been great for you, and I'm sure the next 10 years will be even better.
Hopefully 10 years of, being here, and a large part of that on Chartbusters as well. So a lot of love from the viewers. More importantly, we added a lot of value to the viewers together, and that's something that has always been one of our core commitments to good quality content for all of you viewers. It's an important milestone, and thank you so much for your commitment. Well, we're talking about the stocks itself. Let's talk about the markets. We pull up the two screens on the top of our head. You'll see two of them in the green, two of them in the red. The ones in the red, Nifty Bank, underperformed on Friday as well, currently down about 1/3%. The Sensex is mildly in the red, no worries out there. The Nifty a little flat. Good part is the mid-caps are doing a lot better this Monday.
All right, Manglam, let's get in Nagaraj Shetty then of HDFC Securities. Hi, Nagaraj, good morning. What's your view on the index? It appears the reference point on the downside will be around 23,900 approximately. If that level holds, maybe, in fact, we could see a bit of a bounce. But on the upside, 24,400 is a resistance zone. How do you trade the index at current reckoning?
First, congratulations to Mangalam and Nigel. Good morning. And Nifty, the recent upside bounces in Nifty has changed the sentiment for the short term. I'm expecting Nifty to bounce back from here onwards. And after the false downside breakout of the range on Thursday, and Friday's upside bounce is indicating that we are likely to see Nifty surpassing the initial resistance of around 24,350 odd levels in the coming days ahead.
Right. What individual stocks are you looking at? Because, if you look at some of the names beneath the surface, a lot of them are doing extremely well. Case in point, something like an Inox Wind, which is up 6%. We have Ami Organics up 6% as well. And if you look at something like a Siaram Silk Mills, the stock is up 9% today. They have obviously, informed the exchanges as well that there's no news which expects or which explains this sort of stock move of volumes as well. If you pull up the monthly chart, this month itself, the stock is up 54%. So maybe a lot of these textile names buzzing on hopes of higher exports to the US, a firmer dollar doing well for them as well. So we'll keep an eye out on how this pans out. And for Siaram itself, the ethnic wear business should do well for them, as there are nearly 48 lakh weddings too. But from a chart check, are you looking at any of these cash names, Nagaraj?
If you look at, just you discuss about the Siaram Silk, chartically it has been a sharp upside momentum over the last couple of months. We have seen a limited decline, and eventually the stock has witnessed upside breakout in today's session after showing a marginal consolidation or a minor dip from the higher levels. Volume and RSI is clearly indicating the more upside for the stocks. I'm expecting the next resistance to be watched for the stock is somewhere around 900.
All right, and other stocks that you have on your list, your picks?
Yeah, I have two picks from my side. First is the Majgaon Dock. If you look at the chartically, Majgaon Dock has been in a larger consolidation band. We have seen some gradual downward correction over the last few months, and currently placed at the upside breakout of around 4650, 4700 level, which is the downsloping trend line on the weekly chart. Overall chart pattern is set for the decisive upside breakout at this point of time. I'm expecting this good upside momentum in Majgaon Dock. One can buy at current market price around 4560 levels. and look for initial upside target of around 4,900, and 44.20, 44.10 is going to be the stop loss for the near term. And the second one is Sumichem. Sumitomo Chemicals has been showing some volatile movement at the higher levels. We have seen some exceptional up move recently over the last few months, currently showing a triangle type of pattern and placed near the upside breakout of the pattern somewhere around 550. I'm expecting this stock to show a sharp upside breakout of 550 in the near term. One can look to buy, currently placed around 547. And the target would be around 590, 95 levels, and one can place a stop loss at 525.
Okay, all right, Nagraj, thanks a lot for joining in and helping us out with all of those details. By the way, another big mover in the last few minutes has been Inox Wind. I think we should get that stock up for you on the screen. It's now bursting away. It's up close to around 8%. And I'll tell you what, most of that move has just come in the last few minutes. So a big up move is what we're seeing on that name. And Zomato as well, that's a stock to watch, because it could probably get included in the Nifty in the next review. It's already part of the Sensex, and that one's moving with good amount of momentum. And just one more, Piramal Pharma. The stock had flattered only to deceive, but now it appears they've got their act together and it's breaking out. It's moving towards the 280 rupee mark, or I think the day's high is around 284 rupees. So keep an eye out on that one. I recall it listed at around 180, went down to around 60 rupees. And from there, it's seen a big rally. The fundamentals as well, those numbers are coming about now. So the street seems to be liking that.
Absolutely. That's about Piramal Pharma. And just before we move on, just pull up the intraday chart of Monte Carlo as well. You would know out here, it's one of the coldest Novembers that we've seen in Mumbai. And this year itself, so far, winter has been fairly strong up until now, the early onset itself. And that may bode well for a company like Monte Carlo, which gets a fair amount of its revenue, almost 65% from winter wear itself, stock at the high point of trade. We'll shift focus to our special segment where we get you a few ideas for profit coming in from our colleagues at Money Control Pro. Khushbu Rai Gupta joins in with a stock that she's tracking closely. Khushbu.
In today's idea for profit, we have Colgate Palmolive. Colgate Palmolive is an innovative growth company focused on oral care, personal care, home care and pet nutrition. The company sells its product in more than 200 countries under key brands such as Colgate and Palmolive. The quarterly performance of the company outpaced other FMCG players, helped by aggressive brand investment as rural segment continued to trump urban consumption. Also, the faster growth in the new and emerging channels led to the highest ever quarterly revenue to the company. Colgate continued to lead in the oral care category, and there is large headroom for growth given the lower penetration and high rural salience of more than 40%. While Colgate has a right to win in the oral care category led by superior brands, the high-margin personal care portfolio offers strategic diversification which will expand the total addressable market of the company. After the recent stock correction, the stock is trading at 48 times FY26 estimated earnings. The current valuation appears to be fair, and we recommend investors to wait and add the stock on dips with a long-term view.
All right, with that, we'll step into a short break, come back, get you more of the markets and a lot of stock-specific action. Stay tuned. Welcome back. A couple of financials doing extremely well. Shriram Finance is one of them, up around 2.6%, has had a decent month so far. So we'll just keep an eye out on this. But the stock on our radar right now is RBL Bank. Under pressure today as RBL Bank and Bajaj Finance have mutually terminated their agreement to issue co-branded credit cards, though RBL Bank has seen a bit of recovery from the lows, currently still sitting with a cut of almost 3%. Ritu joins in with the details of that one. Ritu.
RBL Bank and Bajaj Finance have decided to stop the issuance of new co-branded credit cards. The existing portfolio will be serviced, which is about 3.4 million cards, but no fresh co-branded credit cards will be issued under the partnership. And this, as our experts were just saying, is along expected lines. Their dependence on Bajaj Finance has been coming down. For instance, the number of cards issued along with this partnership has come down from 1.26 lakhs last year to about 37,000 only as of September this year. The credit card total origination through Bajaj Finance has also come down from a peak of 65-70% to just 36%, while RBL Bank is focusing on own origination and also launching partnerships with others like M&M Finance, IOCL, IRCTC, and TVS. Now, brokerages largely believe that this can impact RBL's potential credit card market share in the medium term. The ROA may improve, but this is net negative for the medium term. Earnings growth is what Morgan Stanley says. Investec has also cut the target price to about 170. They believe the headline credit growth could also moderate by about 200 basis points. Citi also says that the earnings impact will be determined by how quickly RBL Bank is able to transition this lost partnership business to direct sourcing and to its new partnerships scaling up.
Okay, all right. Thanks a lot for that, Ritu. Well, let's focus on Dixon Tech. That stock is spiking away as we speak. This after they began production of Google Pixel smartphones at its Noida unit. Upasana joins us to help us out with that news piece. Upasana?
Well, the stock remains in focus today as it launches mass production of Google Pixel smartphones. Remember, company's wholly owned subsidiary, that is Colgate Electronics, had entered into a contract manufacturing agreement with Compal for manufacturing of mobile phones. Now, this said production is likely to commence at Colgate Electronics plant situated in Noida. Now, on back of this development, Nomura has given a buy rating with a target price of 18,654 per share. It says that the China Plus One strategy can lead to a significant long-term potential for Dixon from Google. It also estimates that the company can potentially add 15 crores of revenue, that is nearly about 4% of FY26 smartphone sales. And it believes that, moreover, it thinks that it will showcase Dixon's capability to make premium phones, and it will be a key long-term positive going forward. So mostly the stock remains in focus today on back of this and a positive note coming in from Nomura.
All right, we take that point. Thanks a lot for that. An up move is what we're seeing on Dixon Tech, up almost 7% now. But the auto sector, it's posted a mixed set of sales for the month of November itself. Sudarshan joins in with the details of what did well and what did not inspire. Sudarshan.
So it was a mixed set of sales for the month of November. Two-wheeler sales were largely led by exports, while domestic sales have largely remained under pressure. For passenger vehicles, SUV continues to outperform other segments, and commercial vehicles overall sales remain under pressure or slightly in line with our estimates. Starting with Maruti Suzuki, total sales have come a minor beat to our estimate. It was led by SUV segment. SUV segment was up 20%, while compact segment was down 5%. And with this, total sales were up more than 10%. TVS Motor, again, it was led by exports, and overall sales were better than estimates. Total sales have increased 10%, and EV sales were up 57%, and exports too have risen 25% year-on-year. For Bajaj Auto, overall sales were in line. Again, it was led by exports. EV sales here have jumped sharply. It was up almost 120% year-on-year, and even market share has improved to 22%. And in contrast, Ola Electric's market share has fallen sharply. And total sales here were up 5%, and domestic sales were down 7%. For M&M Auto segment, again, it was led by SUVs. Total auto sales were up 12%. SUV segment was up 16%. And in the tractor segment, sales have come in slightly below estimates, but outlook is healthy. Company says good Rabi crop expected to further boost the demand. For the month of November, though, total tractor sales were up 2.2%. Lastly, Ashok Leyland, sales were a mild miss to estimates. Total sales were up just 1%, with CV sales falling 11%. So overall, it's a mixed picture for auto sales for the month of November.
Okay, all right. Thanks a lot for that, Sudarshan. Well, for the time being, though, we'll slip into a short break. You come back, we'll continue to focus on markets. It's fairly volatile out there, oscillating between the green as well as the red trade. Stay with us. Welcome back. Well, India's second quarter GDP number was a shocker, coming in at around 5.4%, which is much lower than what the street was working with. Harma joins us to tell us what brokerages are making of this and what do they expect in terms of action going ahead. Harma, take it away.
The overall consensus after such a GDP number is that brokerages across the board have slashed their FY25 GDP targets for the country. We start off with one by one of them and start off with JP Morgan, and where they say that the clamor for the rate cuts in the next week, the recent policy is growing louder, but they expect a rate cut only in the month of February next year, although the chances of a rate cut this week have increased now considering the print of the GDP that we have given, although that that might not happen, but they can see some liquidity measures being announced by the Reserve Bank of India this week. Now, Citi has also revised its FY25 GDP growth to 6.4% from 7% earlier, and they say that this elevated inflation print also that has come in, that makes the case for a December rate cut unlikely, but the RBI may announce a CRR cut in order to ease some liquidity pressure in the system. And they also said that they could see some renewed urgency in public capex for the second half of FY25. Now, Goldman Sachs has lowered its CY24 and FY25 GDP targets to 6.4% and 6% respectively, but it has maintained its 2025 and FY26 GDP targets at 6.3% respectively. Now, Jeffries is saying that the slowdown in the government spending and the bank credit growth, both of these issues are transitory and they should reverse in the second half of FY25. And they're saying that the possibility of a CRR cut in the upcoming policy meeting have now increased considering this print. And Morgan Stanley also expects the rates to remain steady this time around, but they are expecting the RBI to announce some liquidity easing measures like an open market operation or an OMO. So the rates, there's still some divergent opinions on rates, but some liquidity easing measures are definitely in the offing.
All right, we take that point. Liquidity easing measures will be interesting to see how much they would be absorbing, because liquidity still is at a surplus right now. So whether they go ahead and increase the capex, as you pointed out, is something that we'll keep an eye out on as well. Let's get in some views coming in from the Chief Economic Advisor, V. Anant Nageswaran, and the DEA Secretary, Ajay Seth. What do they have to say about the real GDP figures?
The 5-year GDP growth rate is in real GDP or GDP at constant prices is improving at 4.4% compared to 4.2% in the second quarter of last year. In order to give you some context, because bulk of the slowdown in the second quarter from the supply side, because it is attributable to the manufacturing slowdown and also the slowdown in mining and quarrying sectors.
The DEA Secretary also reaffirms that despite the lower print of the GDP numbers, the data is not alarming and it's not a cause of concern. Let's listen in.
Chief Economic Advisor, I have already spoken to all of you on the day the numbers had come in, and the numbers are, it's not an alarming, numbers are lower than what our potential is, and action is well on the way to make sure that the second half of the current financial year, the number GDP growth rate is expected to be much better, and several high frequency indicators in the month of October are pointing towards that.
All right, with that, what we'll do is take your leave on this edition of Chartbusters. The news that now we have more of the indices down in the red right now, though the mid-cap index continues to hold in the green, and that's something that is what we'll track through the course of the day. That's something that a lot of people would be tracking because their portfolios as well. Take your leave, come back on the other side. We have the team of Trading Hour taking the market action forward.